Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be taking a look at my M1 Finance portfolio. And it was mentioned today that I had a few REITs in there. K97 left me a comment, hey, why do you prefer WPC and Simon Property Group over Main Street Capital and Realty Income? And at that time, when I purchased these other stocks, they were at better valuations. But now I'm looking at Main Street Capital and Realty Income for a while, and he just reminded me to go take a look today. I saw that WP Carry had just hit 52-week highs. So in this video, I'm going to be taking advantage of some capital gains, locking in those capital gains from WPC, rolling just the gains into a new position here. We're going to be taking a look at a few other REITs, but we're going to end up buying Main Street Capital here by the very end of the video. So if you are brand new to the channel, hit that subscribe button above. If you do enjoy the video, find it helpful, hit the thumbs up. And if you have any comments, questions, going over anything in today's video, drop it in the comment section. I always appreciate all your guys' feedback. If you guys have anything going over stock market, personal finance, real estate, drop it in the comment. So let's go ahead and flip the screen around, and we'll go ahead and take a look here. So we are taking a look here at the portfolio. So WP Carry, we are now at 52-week highs. Now we had a little bit of resistance last time we hit we had some highs here in late December, and we fell back. And then, after President Trump's buy recommendation for the entire market, this thing came up, hit its resistance here, trended sideways between January 16th till the 23rd. And it's in maintain. News came out they were going to be raising rates. The Fed was going to be bumping up rates, and boom, this stock took off. Now there is hitting some resistance here. You can see here it's been trending sideways here from February 1st, 2nd, in that range till currently February 14th. So we're hitting that resistance right now. I believe WP Carry may come back, retest the last highs, or maybe even fall back a little bit further going into late 2019 as the Fed comes out after July and says, hey, we're going to begin raising our rates again. And we're going to continue doing a little bit of that. WP Carry could come back. So what I'm going to be doing is relieving some of the risk from this specific stock. I'm not going to be selling off the position completely. All I'm going to be doing here is taking a look at the capital gains that I've received. Here you can see the gains. We've made $99 from this specific stock. $71.63 have been from market gains, and I've made $27.37 from earned and received dividends. So what we're going to do is we're going to sell off $71, basically $72. We're going to say $72 of this stock is going to get sold off, locking in those capital gains, and I'm going to be rolling that into another stock that I've been wanting to add to my portfolio for a while. It's not Realty Income, but it is another monthly paying REIT, real estate investment trust, that I've been wanting to add. Now I have a few different REITs here that I have been looking at. Now I've owned a bunch of different REITs, from Realty Income, Entertainment Properties Trust. I own land, Apple Hospitality, WP Carry, and Simon Property Group, and many others. I really enjoy holding REITs, these real estate investment trusts. But WP Carry, if we look at it here within the last year, look at this takeoff here. It broke right above December's highs and has gone nowhere but up from the beginning here of January. Basically December 26th, the day after Christmas, this stock has continued higher and higher, with only a few days here where it hit a wall here because it was hitting its last 52-week high, and it broke past that resistance once the Fed came out and said, hey, we're not going to be raising rates, we're going to maintain it. And now it is having a little bit of a hard time going above that ceiling point, and I do believe it should come back down, retest that $68 point. So what I'm going to be doing, again, taking advantage of this current selling opportunity to lock in those gains. So the very first thing here we can do, if you are on M1 Finance, really good platform for long-term investing, either in growth stocks or dividend stocks. I made a whole video why it's the best platform for dividend growth investors. If you guys want to check out that video, I will have it in the link above. If you guys haven't checked out M1 Finance, I highly suggest that you guys do check it out. And I do have an affiliate link in the description below and in the comment section if you guys would like to check it out. Completely free and great. So WP Carry, what we want to do here is I want to go ahead and sell off $72 of this stock. So $72, select sell, and you're currently on auto invest. So if you want to sell orders to remain in your cash balance, you must turn off auto invest before the next trade window. Now, because I am rolling this cash into another stock, I'm not going to be worrying about this. We're going to see, I'm going to post a picture here on Friday. So if you guys are watching this right now, when you guys are watching this at 8 a.m. in the morning on YouTube, if you guys are watching this Friday, February 15th, if you head over to my Facebook page, as soon as I can, when I do the buys, I'll post a screenshot over there, and then you guys can take a look here what takes place. So I'm selling off $72 of WP carry. This is just the capital gain, so I'm locking on the capital gains. The dividends have already been paid out into the account and have been reinvested elsewhere. So now we're selling off, taking advantage of those gains. And I've looked at Stag in the past. Stag is a great company. I have not owned Stag. I've owned Gladstone. I own land. I own Gladstone. But Stag, it's a great company, but it's not at a good buying opportunity. Again here, it's at 52-week highs. It has more risk to go down versus go higher currently. We can see that if I had bought this in December, before December 25th, we could have bought this one and had a starting yield over 6% here with Stag. And it's also raised and paid out dividends since 2011. It's been growing and paying out a dividend, and it did go from a monthly paying stock, quarterly paying stock to a monthly paying stock. So since inception here, when they started paying out their dividends back in 2011, they were quarterly, paying quarter after quarter after quarter. Now they didn't cut their dividend here. They basically just divided it by 4. So they divided it by 3. So 30 cents every quarter, took it, divided it by 3 because they're doing monthly now. And they started paying out 10 cents every single month. And then they start raising it every few months here in order to kind of continue increasing that dividend year after year after year. So that is Stag. But the risk here, risk reward, and the current buying yield, 5%, I could have bought this back. You know, if it drops below, $25, that could be a better valuation for this one. But I believe it should fall back just a little bit here. Main Street Capital. Now, this is the one that I am going to be adding to my position. Again, if I had bought this back in December 24th and prior in that range, I could have locked in a nearly 6.8% yield, almost 7%, probably 7% there. But currently, it's not high, it's not low here. If I'm only rolling in $72 plus a little bit of dividends that Apple is going to be paying out tomorrow, so about $75 of capital is going to be going into this stock. Now, if this stock goes higher, great. I don't have to buy it right away. But if it does trend back lower, I'm able to add more equity into this position. I'm going to be locking in that current starting yield for Main Street Capital of 6.25%, whereas WP Carry has a 5.48%. So I'm rolling gains that I'm locking those in. I'm rolling them into a stock here that has a higher dividend yield, good dividend growth. Since 2011, they have started paying out dividends, made it go from quarterly again to monthly, and they have had these very special, nice payouts since 2013. So good history, good payout ratio for a real estate investment trust, great starting yield, and they're going ex-dividend here on February 20th. They're a monthly paying company, so I'm going to be able to take advantage of these dividends here that I'm going to get paid out every month to either roll it into itself or into other positions. And that is, I've looked at New York Mortgage Trust. This was one that was in that same tier. This one has a lot of volatility. That's a volatility as far as 10-year performance. You can see that this stock has gone nowhere in 10 years. If you take a look at Main Street Capital, there's a nice trend here. Past history does not represent future growth, but all in all, this company is profitable. It's moving forward. It has its earnings in check. I'm not going to go through everything else, but that is basically it. So what we're going to be doing here, we've already sold out of the WPC carry, $72. What we're going to do here is let's see here. We're going to go ahead and say edit because we want to add Main Street Capital into the portfolio here. So select that, add it into my baskets, add it into my position. I have to give it at least 1% in order to add it into my portfolio. This creates my total portfolio having a 101% now. That means I have to lower a percentage of my actual portfolio in order to get this moved in. Now, I have my strong stocks here that have long history of growing and paying out dividends. So I want to keep these here because they're really easy to see and visualize which stocks are actually growing and paying out dividends the longest here within my portfolio. Now, there are a couple down here towards the bottom, such as Lockheed Martin, Pfizer, Simon Property Group, Avery Dennison and such. These are a little bit lower tier. It's not that I don't want to invest in them. It's that currently I would rather push one of their positions down, not in the total sense of it all, because I will buy stocks that I'm low. I'm either high or low in equity. It's the target percentages. It depends on the valuation of the time that I buy, and I'm a pretty manual, active investor as far as watching my positions. You can see here every Monday I do my buys and such, but this is just so that the total portfolio hits 100%. So we're going to go ahead and hit save and confirm. Now there's still one other thing here that we have to do. We have the stock added in here. We have it set to 1% of our total target of our portfolio. Now we actually have to make our buy of this stock. So we're going to go ahead and hit buy. And remember, we sold off $72 of Main Street Capital, of WP Carey. Now we're going to roll that $72 plus I have Apple paying out tomorrow. Apple should be paying me out tomorrow about $2.78, somewhere in that range. I've been buying up Apple in the last few weeks, so I'm not sure exactly how much I should be receiving here, but I'm going to go ahead and say that up to $77 is what I want to buy of this specific stock. So if I have $72 from WP Carey and Apple pays me $3, that's going to be $75. If I don't exceed $77, then that whole amount should be focused into Main Street Capital. So I'm going to go ahead and confirm this and go ahead and confirm again. And now during the next trade window, WPC Carey, $72 is going to get traded away because it doesn't matter how many shares you have of that position, because here in M1 Finance, still partial shares. So you're able to sell off a partial of that share, $75 worth, and buy into something else. So that is all set up. There is all my activity. You can see here that we have the little transfer icons, meaning that we have some portfolio. Our portfolio has some estimated trades. So I'm going to be selling off WP Carey, $72 worth, and I'm going to be moving that $72 into Main Street Capital. Plus, we also have Apple. I don't have Apple pulled up here. I can go ahead and pull it up. But Apple will be paying out a dividend tomorrow. If we go here down towards the bottom, on the pay date is the 14th. Oh, so I should have actually got paid by Apple on, it's midnight. No, should have paid today. So I should be receiving those dividends probably Friday sometime. I should hit the account. So I will be adding those dividends as well into Main Street Capital. So around $75 worth. I'm going to go ahead and post the screenshot over on Facebook. So if you guys follow me on Facebook, links will be in the comment section in the description below. I post a screenshot of my buys and sells, what price I bought them at, how many shares, and how much it's increased my dividends going forward. So that is basically it. I'm going to be lowering a little bit of risk off WP Carey and rolling into one new REIT that has a good valuation point. So that is it for today's video. If you guys did enjoy the video, hit that thumbs up button below. If you are brand new to the channel, have not yet subscribed, or just a recurring viewer, haven't subscribed but come here a lot, hit the subscribe button. I always appreciate all the brand new subscribers. And of course, if you have any comments, questions, going over anything in today's video, if you're going out there and looking to buy real estate investment trusts, take a look at M1 Finance, open a retirement account, the Roth IRA, where you're able to tax shelter all the dividends, the capital gains, and it's allowed to compound tax-free within there until 59.5. So I have a bunch of videos on Roth IRAs as well. So that is it for today's video. Again, thank you all for tuning in. I will see you next time. Have a great day. Bye.